Now, the best investment in the world is the investment in your mind. Hello, everybody. This is Shane Chu from LifeChamp, and I want to welcome you to this webinar brought to you by Bursa Malaysia called Profit from Market Volatility with Structured Warrants. Today, we have two guest speakers from investment from Kenanga Investment Bank as well as Macquarie Securities, so that you'll be able to hear from them what actually are warrants. Okay, now I'm sure some of you here would have come across warrants before. Maybe you have made big money, maybe you have lost some money. So I personally have seen investors who have lost more than 50% of their capital in the market because due to they didn't understand the concept of structured warrants. At the same time, I've also seen investors who have 10 times their net worth because they know how to use structured warrants strategically so that they can do it to their favor. All right. So today we are going to learn from the two issuers, renowned issuers from Malaysia, to understand what exactly are structured warrants as well as its trading strategies. So in the next 2 hours or so, our speaker will share you what are structured warrants, what are things that you need to be aware of, and what are the trading strategies and how you can make it to use money and profit from bull and bear market. Okay, so if any question like how come the market share go up, the warrant price go a bit like this, okay, this is a perfect chance for you to ask the issuers. We are very honored to invite two renowned issuers from Malaysia to join this webinar with you. All right. Now, before we proceed further, just want to test if you can hear me and see my screen and see my screen, hear me clearly, see my webcam. Please type in the chat box and let me know. Yes, I can see it. All right, cool. Awesome. Now today, thanks for tuning in early. Our room is full as early as before we start. So if your friends cannot join in this webinar, we are also live streaming on YouTube. So can ask them to catch our YouTube live stream. And the good news about this webinar is that we are going to have a quiz towards the end of the webinar. So in order to facilitate a smoother experience for the quiz, I will need all the attendees who want to participate in the quiz to download this Kahoot app, okay, before we proceed the quiz, okay. You can go to Google Play or you can go to App Store to download this Kahoot app. So this is the quiz that will be conducted on Kahoot. So if you can download the app, you can enable you to have a faster response to the quiz questions and let you have a bigger chance to win the prizes today. Where at first prize, we are giving away the Apple AirPods Pro. Second prize, we are giving away a Philips Air Fryer. And the third prize, we're giving away a Amazfit GTS. All right, so in the meantime, please go to download Kahoot so that you can participate in the quiz shortly. All right, so without further ado, let me briefly go through what is the agenda today. Now, our webinar starts at 10:30 and we aim to conclude about 12:30 to 1 o'clock. So firstly, we will get the speaker from Macquarie Capital Securities coming to talk about what are structured warrants and its characteristic, understand the key indicators in warrants, how to pick the right warrants, and then we'll talk about he will talk about some useful warrant trading tools. This will be about 14 minutes, and then after that we'll open for 15 minutes of Q&A. Then followed by our speaker from Kenanga Investment Bank, Isabelle, who will talk about trading strategy for warrants, common mistake of warrant traders, key factors, and risk trading ideas. Then we will follow with Q&A that will aim to conclude about 12:25. And at 12:25, we will start our quiz. So the top 3 winners will stand a chance to win our Apple AirPods, Philips Air Fryer, as well as Amazfit GTS. So you need to pay attention to what the presenter present in this webinar. So the more you understand the idea, the better it is that you'll be able to understand the quiz questions. All Right. So disclaimer, whatever the speaker present to you is only for case study purpose. In no way that the speaker or Bursa Malaysia give you any buy or sell signal to any stock or structural warrant. So if you decide to do any trading, it is all entirely your own. Okay. So allow me the pleasure to introduce our first speaker today, Leon Cumming. Okay, Cumming is the head of warrants sales in Malaysia. He is responsible for the issuance of structured warrants and organizing and speaking at various warrant seminars and workshops. He graduated from the University of Nottingham with a master's degree in engineering. So prior to joining Macquarie, Cumming worked as a dealer in the treasury division of a local bank where he specialized in currency, money market, and derivatives product. Now, I met Cumming, I think 1 or 2 years ago. After I met Cumming, he really taught me a lot more about structured warrants. So without further ado, let me hand it over to Cumming. Cumming, are you ready?
Yes, hi everyone. Morning.
Cumming, you may start sharing your slide now.
Shin, can you allow me the access to share the screen?
Sure.
Right, got it, Shane. Thank you very much. So first of all, thank you everyone for taking time off on your Saturday morning to join us today. My name is Cumming. So today, the next 40 minutes, I'm going to spend this valuable time to educate all of you about the basic of structured warrants and what are the things that you need to pay attention at. And without further ado, I'm sure many of you are excited to know, when was the first structured warrants listed in Malaysia. Many of you actually are very surprised. If I tell you it's maybe year 2010, it's still fine. But even me myself, I just found recently that the first structured warrants was listed in Malaysia back in 1995, about 25 years ago. But investors only started to pay more attention to structured warrants market in 2014, and subsequently we saw a volume surge in 2018. As you can see on the graph here, the yellow bars, those are from 2018 onwards, when structured warrants are actually exempted from stamp duty. This zero stamp duty initiative has effectively reduced the cost of trading warrants, especially for investors who trade huge sizes. Don't underestimate this exemption, because stamp duty is 1 ringgit for every 1,000 ringgit value of contract. So if you are trading 100,000 a month, you can save 100 ringgit. So besides the growing political uncertainty and also the rising volatility in the market have also posed a lot of trading opportunities for investors. Here are the best performing stock and index warrants listed by Macquarie in the month of May. You can see that the glove core warrants double or even triple in prices, while the put warrants over the Hang Seng index gain in value when the index finished in the negative territory in the month of May. And based on the performance in May, what we can conclude here is that investors, they favor warrants because of the gearing effect. So to simplify this gearing, assuming that a Supermax call warrant is priced at 20 cents. Every 1 cent movement will give investors a profit or loss of about 5%. As you compare to a 1% movement in a Supermax stock, which is about 8 ringgit, that only contributes to about less than 1% of profit or loss. Therefore, warrants allow investors to gain leverage exposure to the underlying shares, especially those large cap ones like Public Bank, CIMB, even the top glove itself. Also, because warrants are cheap in price, investors can gain the same effective exposure to the underlying share with a smaller amount of capital. And for your information, there is no minimum amount when it comes to trading warrants. Investors who wish to trade the foreign market index, you can do so with structured warrants listed in Bursa Malaysia. Example, you do not have to open an account in Hong Kong to trade the Hang Seng Index. You can do so by using your existing CDS account. Finally, structured warrants allow you as an investor to profit from both an uptrend and downtrend market with call and put warrants. Next, what are structured warrants? So structured warrants are an equity derivatives which are listed and traded on the exchange. So unlike the options which are traded on the over-the-counter, which we call OTC market, investors, you can buy and sell warrants on the exchange before the last trading day. You can keep buying and selling all the way until the last trading day. And there are actually two different types of call warrant listed on Bursa Malaysia. These are the important concepts, namely the call warrant and the put warrant. So for those investors who have some knowledge about options, you should be familiar with these two concepts. Call warrant represented by a C, and you may look at call warrant if you have a bullish view on the underlying stock or index. Because why? Because call warrant value will increase when the underlying share or index goes up. So example of a call warrant is a VSC28. As you can see, there's a C there. So this is a call warrant. On the contrary, if you are bearish or pessimistic on the particular stock or index, you may buy a put warrant. Unlike call warrant, put warrant moves in the opposite direction, okay, as the underlying stock. So which means if the underlying stock or index goes down, this particular put warrant will go up, and it is represented by a H after the stock or index code. So example here, FBM KLCI HAI. This is a put warrant. Do not confuse structured warrants with company warrant because they are two different products. Okay. The first difference here is the issuer. Structured warrants are issued by a third-party financial entity, such as Macquarie, Kenanga, or even other local investment bank, while the company warrants is issued by a listed company themselves. And most listed companies, they issue company warrant. The objective is to raise funds in the future. This is the reason why you see the expiry for company warrant is usually much longer to the structured warrants. These structured warrants are more suitable for short-term investment or trading. The tenor is relatively shorter, usually from 6 to 12 months. And when we move on to the settlement upon expiry, most of the structured warrants are cash settled, while the company warrant can be converted to the underlying mother share if the company warrant expires in the money. Lastly, I would like to touch on the presence of market maker. So for those who are still guessing what is the role of a market maker is the party that provides liquidity to the security, in this case, the structured warrant, and ensure that the warrant price moves in tandem with the underlying. The issuer of structured warrants is also the market maker. Okay, since there are no designated market maker for the company warrant, the company warrant prices are determined purely by the market demand and supply. Not necessarily 100% it will follow the movement of the underlying share. Next, Macquarie actually offer a range of index warrants products for investors who want to gain exposure to the broader market. So the most popular index warrants that in Malaysia that we have is the Hang Seng Index, followed by the S&P 500 warrant, which tracks the US market. We have A50 China, and of course our local KLCI as well. So one of the many benefits of index warrants will be diversification. Okay, because index represent the price movement of 30 stocks or more, investors will have minimal or no impact at all, even when one of the underlying stock limits down, like what happened to MyEG after the general election 3 years ago. So therefore, if you are buying index warrant, you are not subjected to any single stock risk. Besides that, Macquarie currently only have call and puts over the index warrants, which means you can only treat the broader market when it comes to uptrend and downtrend. At the moment, we do not have any put warrants over single stock yet. We always emphasize on the importance of warrants education before you trade. So today, I will take this opportunity to go through a few key indicators that can help you understand warrants a bit better. So the exercise price is very important because this is the price where investors, you can exercise the right to buy or sell the underlying on the expiry date. So investors, you need to know, you need to have this exercise price in order for you to calculate the intrinsic value of the warrant if there's any. So example here, we assume that this call warrant has an exercise price of 1 ringgit and the current underlying price is 120. So based on the formula I have here on the bullet point number 2, subtracting the current underlying price with the exercise price will give you a positive number in this case, which is the intrinsic value of this call warrant. So 120 minus 1 ringgit is 20 cents. So this 20 cents will be the intrinsic value. But intrinsic value, whatever price you see in the market will not 100% to be the intrinsic value. We have another portion that we call the time value, or some investors, they refer them as the premium. So on the other hand, if your intrinsic value is not positive, it's a negative value, it means that your warrant is currently out of money. So for a call warrant, you can see here, if the current share price is higher than exercise price, yes, the warrant has a positive value, therefore it's in the money. If the current share price is equal to the exercise price, this warrant is actually called as at the money. And the last scenario here is this happens to most of the warrant where the current underlying price is actually lower than the exercise price. This warrant is, we call it out of money. So the moneyness for call warrant is pretty simple to understand, but the moneyness for put warrant is totally opposite of the call warrant. But one thing I wanted to highlight to investors here is that do not let the moneyness of the warrant affect you when it comes to the warrant selection, because a warrant which is in the money right now doesn't mean that it will have value in 2 months' time or even on the expiry date. The last trading day is another key indicator that many investors tend to miss out because all they emphasize is the expiry date. I would say the last trading day is actually more important because this is the last day that investors can buy or sell this particular warrant. The last trading day usually falls on the second business day prior to the expiry date. So we assume in this example here, this table, assume that the expiry date of the warrant is 30th of May. Okay, what will be the last trading day? It will be 2 business days. So the last trading day for this warrant will fall on 28th of May. So this is how you actually calculate. On my third slide today, I did mention about gearing effect. It's the reason why investors trade warrants. But how do you actually measure gearing? So effective gearing is your answer here. And today, I'm going to show you how you interpret this. So we assume in this example, warrant X has an effective gearing of 8 times. So this merely means that the call warrant will change by 8% for every 1% movement in the underlying price. So you will make 8% on your warrant if you get the direction right. But what if the market goes against you? You bought a call warrant and the market's dropped 1%. You will lose 8% on your call warrant as well. So the higher is the effective gearing, it merely just gives you a larger movement in the warrant, which led you to a higher profit potential, but also subjected to higher risk. No such thing as the higher is the effective gearing, the better is the warrant. It all depends on your own risk appetite. The last indicator that I wanted to share today is the warrant sensitivity, which tells investor how much the underlying need to move for a one-tick movement in the warrant price. So I have an example here. There are two core warrants, A and B, with Bursa Malaysia shares as the underlying. So the price of the core warrant A moves by one tick as the Bursa Malaysia share moves by 6 ticks. Whereas the price of core warrant B moves up by one tick as the Bursa Malaysia share price moves up by 2 ticks. So just based on common sense, which warrant do you think is more sensitive to the price movement in the Bursa Malaysia shares? You can type your answer over on the chat if you like to. I see a mix of answers, some A, some B, of course. But let me just tell you, the answer here should be B. Okay, why is it B? Because if you want something more sensitive, which means is you want the minimum movement in the underlying share price. So when it comes to sensitivity, you want a sensitive warrant. Try to look for a sensitivity which is lower. Okay, there's no lowest. It can be 0.1, 0.2, but generally those warrants that we have sensitive enough in Malaysia is usually about 1 to 1.5 ticks. All right. And investors, you can get all the warrant terms and indicators, including a few that I have mentioned earlier, all at one place, which is the warrant terms page on our website, Malaysia Warrants website. And this tool is available for all structured warrants listed on Bursa Malaysia. You can find exercise price, the last trading date, effective gearing, and sensitivity. Of course, why I chose to actually touch on these items, because these are the more important one. But if you want any other indicators like premium, you can find it as well. Besides that, you can also find the price correlation chart on the same page, on the warrant terms page. Do check out the chart before you buy the warrant to make sure the warrant price actually do follow the price changes in the underlying share price or index. Because I think end of the day, when you buy a core warrant, you expect the mother share to go up. If you actually bought into a core warrant that doesn't move when the mother share move up, then it defeats the purpose of you buying into a warrant. Next topic will be how investors can, what kind of parameters do you use to select the right warrant for yourself. There's no best warrant. There's only the most suitable warrant for you yourself. So in Macquarie, we have identified 4 simple steps to select a warrant. First of all, you need to have a view on the underlying market. Next, think about your investment time frame. Is it 1 week or 1 month? Step number 3, choose an effective gearing in which you are comfortable with. So do not choose one which is beyond your own risk appetite. And finally, compare the liquidity of the warrant. Of course, I believe if I just show you this slide, many of you will be confused as well. So I will spend the next few slides to explain it step by step for all of you. So when we talk about market view, which means that you need to be either bullish, bearish, or you think market is going to be sideways. So all investors, you are welcome to use this free Reckonia technical event lookup tool on our website as a reference. You can view the short-term, intermediate term, or even long-term trend or signal on right above the chart here. If you can see, there's a column up here that you can see is a green arrow up or is a red arrow down. For example, in this case, we are using Inari as an example. Inari is neutral in short term, but bullish in long and intermediate term. Besides that, we have also prepared a guideline for investors to decide on what expiry to choose based on your own trading profile. So if you are a day trader, you can choose a warrant with less than 1 month to expiry. But if you plan to hold the warrants for slightly longer, up to 2 weeks, you might want to consider to look at warrants with at least 3 months to expiry. For those longer term investments who maybe expect a big swing or reversal in terms of trend, encourage you to look at even longer term warrants with more than 6 months to expiry. A lot of investors, when it comes to liquidity, a lot of investors actually interpret liquidity as volume traded, which means if the volume is high, it means that this warrant is good, has high liquidity. I would say this is true for normal stocks. If you're trading normal stocks, it's true because if there's no volume, which means there's no interest for this stock. But warrants liquidity is a completely different story. Warrants liquidity are generally provided by the market maker. Okay, so what's so good about warrants with good liquidity? Warrants with good liquidity allows investor to enter and exit the market with ease. But how? How are you going to enter and exit as soon as possible? So assume in this case, based on the bid and ask queue that I show on my slide today, assume that you want to buy 500,000 in this particular warrant. Your order can be done at one go if you want to buy because there's about 1.4 million units queuing to sell on the best ask price. So this same rule applies when you want to sell. You want to buy 500K, it can be done in one go. And if you want to sell 500K, it can be done right away as well. But do you think you'll be able to enter and exit as quick if there are only 50,000 queuing on the best bid and 50,000 queuing on the best offer? The answer is no. Okay, and of course, you can actually pay attention on the we call it schedule field, which means the queue buy and sell queue, which is not just on the best bid and ask. We actually subsequently queue on the next 3 to 4 levels as well. So that is what we meant by liquidity, and this is provided by the market maker. Always choose. It's always good to choose a warrant with a high bid and ask volume, and make sure that the best bid and best ask price of the warrant is on tight spread, which is one tick only. So before I explain about what is sold out warrant, so just take note here that all of you should avoid buying a warrant which is already sold out. How we determine as an issuer, how we determine whether one warrant is sold out or not? So for your information, each warrant which is listed on Bursa has a fixed quantity upon listing. So once the inventory level of the issuer drop below a certain threshold, the warrant will be listed as sold out warrant. So for example here, this particular warrant A, we have a total issuance size of 40 million units. So warrants may be placed in the sold out list when the issuer inventory level is lower than 8 million. So because why? Macquarie usually we use 20% as a benchmark. We will start informing investors once is half the issuance is sold out. Then subsequently, once it's added on the sold out list, we will inform it on both our website and also our Telegram channel. But as an investor, why should you avoid buying a sold out warrant? So here's the reason why. Usually the market bid and ask price, which can be the last time price as well, is higher than the fair price shown on the Macquarie's Life Matrix for the same warrant, which means the market price, the last time price is actually much inflated. And number two, the market price movement of this particular sold out warrant does not fully reflect the price changes, which sometimes you will realize that a call warrant which is sold out, they sometimes do not move at all, even when the underlying share price is up 10%. Or on the other hand, you might realize when the underlying share or index is not moving, but this particular warrant might be up 50% or down 50%. And the last part here is the useful warrant tools that can help you in your warrants trading journey. And this is where you can access all our warrant tools for free. This is our homepage, malaysiawarrants.com.my. Use the totally good for investors to actually use the warrant search tool for your warrant selection. Follow the 4 simple steps that I shared earlier to select the most suitable warrant. So just a quick recap for everyone here. Step number 1 will be your market view. You need to know whether you are bullish or bearish. So if you are bullish, select a call warrant. Otherwise, if you are bearish, look for a put warrant. Step number 2, decide on your trading time frame. I assume that if the investors is slightly longer term, want to hold the warrant for a slightly longer time, you might look at warrants expiring in 6 to 9 months. Effective gearing, you can leave it as it is, or if you are slightly higher risk, go for an effective gearing higher than 5 times or 10 times. Next step, you need to make sure that you click the all issuers on this tab here. Make sure you click all issuers and submit. So once you click submit, this particular tool will filter out all the warrants which fits into your requirement. And last step here, don't forget, compare the liquidity of the warrants here. So the volume that you see on the warrant search page here, the buy and sell volume is almost real time. So once on one page itself, you know that which warrant has good liquidity and which warrant's liquidity is just so-so. So just to remind everyone, liquidity depends on 2 factors. Factor number 1, the buy and sell volume, the bid and ask volume. Number 2, the spread between the bid and ask price. So the tax spread means that the warrants is on 1 tick only. So warrants below 1 ringgit, usually 1 tick spread is 0.5%. I know there's a lot of things to digest in this short 40 minutes, but don't worry. This is the most important slide for the whole webinar. And if you're not paying attention before this, don't worry. Make sure you do now, because you will find many clues here, which is going to be useful for the quiz later. Macquarie, we introduced this live matrix in Malaysia 6 years ago in 2014, because we believe transparency will benefit warrants market in long term. And live matrix is a table that shows you exactly what is the warrant bid and ask price throughout the day in real time. And the prices displayed here are dynamic. It will change according to the underlying market price. And with live matrix, investors, you do not have to guess or calculate your price manually. So assuming that, referring back to the market view just now, it shows that Inari can be bullish in medium term or even long term. So assuming that all of us are bullish on Inari. So let's go through this example together. If this morning Inari share price are trading at 1.69 bid and 170 ask price, by looking at this particular live matrix, you can tell that Inari C61 should be trading at 14 cents bid and 14.5 cents ask. Assume you are bullish on Inari, you want to buy both the mother share and also the call warrant. You can buy the share at 170 and you can buy Inari C61 at 14.5. But do take note that you have to check whether the market price is the same as live matrix or not. So make sure it's the same before you buy. Theoretically, 90% it should be the same unless it's a public holiday, because the live matrix is only applicable during the market trading hours. Live matrix also allows you to plan your strategy and set your target price for the warrant if you wish to. Given that this is day trading, your target price for Inari is 176 bid, assume. The corresponding target for Inari C61 should be 16 cents. Okay, if Inari shares move to 1.71 buyer, you should be able to sell your Inari C61 at 16 cents. So doing the same trade, okay, buying the Inari shares and buying the Inari C61. two different instruments, but both they will give you the same result in terms of they are both positive because you make money. Okay, you will probably make about 3.5% from the Inari shares, but Inari C61 will give you a 3 times higher return at 10.3% because of this thing called gearing. LifeMatrix is such a strong tool that it also allows investors to identify whether this particular warrant is sold out or not. So if you look at LifeMatrix with all the warrant price here, for example, Top Glove C76, you realize that the warrant price is all 0. So what does it mean? It means that this warrant is fully sold out because Macquarie has no more inventory. We have 0 inventory left to sell. So therefore, you will see that this warrant in the market will be super inflated. I still remember when I last took the screenshot for this matrix. That time the market price is about 81 cents. When you see the blue line here, the fair price is only 53.5 cents. All right. So, however, the LifeMatrix on the website is only available for warrants listed by Macquarie. Investors are also encouraged to use the warrants calculator on the website to measure the holding cost of a warrant if you wish to hold the warrant over a certain period of time, because all warrants are subjected to time decay. So with this useful tool, you do not have to calculate manually. You can just use this to roughly know, let's say, if the mother share doesn't move, if you hold for 1 month, what will happen to your warrant. And same, we will be using Inari C61 as an example here. 3 simple steps. Number 1, key in your target price for Inari. In this case, I assume is 2 ringgit. Number 2, your target date. I'm putting 28th of June here. And step number 3, check the indicative bid price over here, the indicative warrant bid price. So the indicative warrant bid price should be 21 cents. So on Monday itself, if you're still holding this warrant, you can try to compare it with our LifeMatrix to see if the warrant bid price is the same or not. I wouldn't say it's 100% same. That's why I mentioned this is indicative, but it will be good for you to plan your strategy, especially for those who plan to use this as a hedging tool. This is pretty useful. And to learn more about warrants and to receive the latest update, latest development on the warrants market, do follow us on Telegram. You can scan this QR code to join right now, or I will share the link on the chat later together with my contact details. If you're active on social media, do follow us on Facebook for animated warrants video, and we will be running a few campaigns as well. This is the QR code. And lastly, this is our warrants hotline and our email. Please reach out if you have any warrants related questions. And that's it for my simple presentation today. I will spend a bit more time to address all the burning questions that you have right now.
All right, thank you so much, Kaming. So we are now moving to the Q&A session for Kaming's presentation. So if you have any questions that you want to ask our speaker coming from Macquarie, please type in the Q&A box, not the chat box, because chat box will be so full of the comments that we can't even keep track of the questions. So please write in the question box if you're tuning in from webinar platform. If you're tuning in from the YouTube, you can comment at the live chat so that we can pick some of the questions to ask our speaker here today. All right, so I believe that many of you have already picked up the idea about warrants, how to see warrants, the sensitivity, as well as look at the LifeMatrix, so on. So if anything not so clear about that, please ask in the Q&A box or ask on our YouTube channels if you are streaming in from YouTube. Coming, there are many questions on our Q&A box for you to address.
Yeah, it might take some time for me to go through the questions one by one. So hope that you guys are still staying with me. And of course, I think Shane will help me out with some questions on YouTube. So later I'll go through the YouTube questions. So I will just go through the questions on the Zoom first. All right, I actually spot quite a number of good questions, but because of the time constraint, I will just pick the most relevant one. So for those that I can't answer, don't worry, you can still contact me after this on my Warrants hotline or email. So the question is, I have this question on premium. Is premium an important consideration? And how do you decide whether a particular premium is excessive? So I would say it depends on your trading profile, your trading style. So if you are the short-term investors or you're trading on day trading, you are doing on swing trading, premium does not matter at all. What you need is liquidity. Okay, because when you do short-term trading, you want to buy, you want to enter and exit the market as soon as possible. Premium only matters if you are the long-term investors that buy and hold the warrant for 4 or 5 months or even until expiry. Yes, you look at premium. If possible, go for warrants with a lower premium. So that will be in your advantage. But so far, based on what I see, I wouldn't say there's an excessive benchmark, okay, for premium, because as the market become more volatile, the premium will increase as well. Premium is a function of many things: expiry date, exercise price, and also the implied volatility. So generally, I actually find out that many warrants are actually trading at, especially the glove names, they're trading at very, very high premium. So if you see such warrants with such high premium, so what you can do is you can try to change your trading profile a little bit, try to go a little bit shorter term, can be 2 to 3 weeks, rather than hold the warrants for 4 weeks and expect a 400, 500% return. Okay, so I have a question on index warrants, which I think is good to clarify over here because many investors are confused. How come the Hang Seng warrants that we have is not following the Hang Seng cash market index? So all our Hang Seng warrants are actually tracking the Hang Seng futures, okay, HSI futures. And the nature about HSI futures, they have expiry date as well. So we have June futures, we have July futures, we have September futures, but which one do you follow? Generally, we will follow the spot month futures. Means now is June, we follow June. But usually at the end of the month, like now is towards the end of the month, we have to roll over. Okay, we have to roll over our position from June to July, because if once June expire and we got no, if we don't roll over, then investors, they can't actually refer to the July futures. So yesterday is the day that we roll over the June to July futures. And because June and July futures, that's different. Okay, June futures is trading about, yesterday, if I'm not mistaken, June futures is trading about 25,600, while the July futures is trading 200 points lower. So for investors who are not aware that we switched the rollover, they are actually confused how come the price is so big difference. So this is the reason why you need to join us on our Telegram, follow us on our Facebook, or if you want to know the exact date when Macquarie is going to roll over the futures contract, you can actually reach out to us and ask us, because this is the most important thing when it comes to trading index warrants. Make sure 100% you are following the or tracking the right index futures. Next question. Okay, what happened to call warrant if the mother share bonus issue? For example, let's say if right now we just take Top Glove as an example, okay? So if Top Glove wants to give a 1-to-1 bonus issue, which means most of the time if 1-to-1 bonus, the share price will be divided by 2. So as an issuer, Macquarie, we will do adjustment to the terms of the warrants. For assuming if for Top Glove C76, allow me to share my screen here. Just a moment. It's okay if I can't share. It's right. So assuming that Top Glove C76, the exercise price is 14 ringgit. So the kind of adjustment that we will do to this warrant will be, we also will divide the exercise price by 2. Why we do that is so that the holder of the warrant will not be disadvantaged by the corporate action. So generally, theoretically, before and after the bonus issue, the X date, your warrant price should be the same. Okay, I hope I answer you on this. Just one more question on Zoom before I proceed to the YouTube questions. Okay, when it comes to breaking down how much capital you need to allocate for your warrants, I would say generally warrants is a short-term, high-risk trading product. So wouldn't encourage investors who are new to go right into it. Like you have 10,000, you actually use 10,000 to buy all the warrants. So it's good to kickstart. Maybe you can start with 8 too. So 80% you can buy the mother share, 20% you can buy the warrants. So as you get more and more comfortable with the gearing, you understand how it works, you can slowly adjust your portfolio. So that is more on the portfolio management side. And it depends what is your target return and what is the maximum loss that you can afford to take. Last question here. What is SP 500 HJ tracking? So S&P 500, same thing as the Hang Seng. All our index warrants are tracking futures. So for S&P 500 warrants, we are tracking the E-mini futures. And just an additional point for all of you, our KLCI warrants are tracking the KLCI futures. So now I'm going to go through a few questions on the YouTube.
Okay, just let me pick some questions from YouTube to ask you.
Yes, that'll be good.
Yeah, okay, cool. So the first question is, does market maker control warrant prices?
Okay, the answer is yes. We have to control the price, provided that the warrant is not sold out. Okay, so how we control and why Macquarie or as a market maker, we want to control the price of the warrant? Because if the warrant price is not controlled, example, Top Glove, if Top Glove shares go up, if the Top Glove warrants don't follow, investors, as an investor, you will be pissed, am I right? You will be disappointed because the reason why you buy call warrant is you want to make money from the call warrant when Top Glove shares goes up. So what we do, market maker, is, for example, if this is a sensitive warrant, if Top Glove shares go up by 6 cents, this warrant need to move up by 2 cents. So who will be the one moving the warrants up and down? So market maker is the one. But how we do it fairly is, just now I did mention about live matrix. So we move the warrant price according to the live matrix. So showing investor the live matrix is actually telling you this is my cost. This is where I'm going to put in my price. So if you follow the live matrix, you should be able to trade according to your plan.
Okay, so I'm looking at my YouTube screen. So yeah. I need to manage 2 monitors. Is there a situation where mother share is up, but the call warrant falls? Like Supermax share price went up, but call warrant goes down?
Thanks, Shane, for this question. I think this is a very good question, and I think if you pay attention to my slide on sold out warrants, you will actually realize that I did mention if the warrant is sold out. For Macquarie, you can check it on the website, but other issuers, I think you have to basically contact them to find out more. So if the warrant is sold out, it's very common that the price of the warrant don't follow the mother share anymore. Supermax can be up 50% and the warrant doesn't move. Or the other case is Supermax shares fall, but the warrant actually goes up. So this is the reason why I think investors should avoid trading warrants which is already sold out.
Okay, great. We have one more very technical questions here is, assuming if announcing the 1-to-1 bonus issue, the exercise price of structured warrant will be changed to half of the original exercise price. So that changes will take effect before or after the X date of the bonus issue from MKC.
Okay. So thanks. I think this is just a follow-up question on what I have explained earlier. So the adjustment will take place on the X date itself. So on the X date of the bonus issue, for example, or a split, on the day itself, you will realize that the exercise price and the exercise ratio will be adjusted accordingly. And as an issuer, we need to make the announcement on the Bursa website under Structured Warrants, and all investors you can check for the announcement actually 1 day before the exit.
Okay. So the next question is, how does issuer determine the warrant price upon listing?
Okay, this is honestly this is a bit more technical. For us, we actually price up our warrants based on this model called BSM, Black-Scholes model. So for Black-Scholes model, there are 5 different parameters that we need to take into account, which is the exercise price, underlying price, the tenor, the implied volatility, and also the interest rate. So these 5 different parameters will affect the price of the call warrant. We assume that if this call warrants, if we want it to be priced at 20-30 cents, then we basically need to adjust the exercise price. We need to adjust the tenor to make sure the price is falls within the range that we wanted. And of course, end of the day, we do take feedback, good or bad feedback from investors. If you think that if our exercise prices are too high, if you think that our warrant prices are too high, do let us know. We are happy to cater for investor demand.
Okay. So there is this question from Ho who asks about how much, how does it affect the investor? Do they make money or lose money when, let's say, the issuer switch from June futures to a July futures contract?
Okay, this is about the question about index rollover. So based on what I see yesterday, so I have investors who are confused. They actually call me and say, how come they make money from the rollover? Okay, so I wouldn't say it's 100% make money or lose money. Basically, for us, is because let's say if the rollover will disadvantage investors, we will actually make adjustment to our implied volatility to make sure investors has minimum impact on this. Either if they win small amount. If they lose small amount. It's not 100% that it's no impact. I would say it's minimal impact. But for yesterday's case, the June to July rollover is actually in investors' favor. So
Okay.
for investors, if you are afraid that the rollover might disadvantage you in any sense, you can choose not to hold the warrants during that period of time. It's fine.
All right.
Yep.
The next question is, just now you mentioned about corporate actions such as a bonus issue, stock split that will affect. How about rights issue? Would that affect it as well?
Yes, rights issue will affect. Special dividend will affect as well. Like what happened to AirAsia about 1.5 years ago, when AirAsia decided to do a special dividend, we did adjustment on our exercise price and exercise ratio for all the AirAsia warrants as well.
Okay, so the next question is, if I would like to hold longer time of call warrants, how should we calculate its implied volatility? Is it a variable factor?
Yes, I wouldn't think that it's actually sensible or possible to calculate the intrinsic value in because the share price, the underlying share price moves every day. Unless you have a specific target price, you have a specific date, then you can actually use our warrant calculator to calculate what is the indicative bid price of the warrant on that particular date. But when it comes to intrinsic, means basically if you talk about intrinsic means I assume that you want to hold the warrant all the way until expiry, because on expiry date there's no time value left. That is only intrinsic value. And how you calculate intrinsic for a call is you take the underlying share price minus the exercise price divided by the exercise ratio, and there you get your intrinsic value. And throughout, let's say you got 6 months until expiry. Today you buy this warrant. 3 months from now, you want to know what is the intrinsic value. You need to have a target price, the target price for the underlying. Otherwise, you are not able to calculate the intrinsic value.
Okay, so let's do one last question from YouTube, which is I currently have warrants that is in a sold out list. So can you advise us, like, what should we do?
The question you should ask yourself is, you bought this warrant before or after it was sold out? Okay. if you bought these warrants before sold out, then it's fine because you bought it when it's at the fair price. And when the share price go above the fair price, it's good for you. It's in your favor. Market price inflated, definitely is in your advantage. But let's say if you bought the warrant when the market price is inflated, then it's bad for you. So generally, doesn't matter whether the warrant is sold out or not. If you get your view wrong, so for us is you need to be disciplined. You need to basically cut loss. And we do not encourage investors to double down, which means to average down, because averaging your losses, especially on a leverage product, is very, very dangerous. Okay, so you need to be disciplined, set a very strict cut loss. Once it hit your price, whether it's sold out or don't sold out, you need to cut loss.
Yeah, that is definitely very true. I have students or investors coming to me explaining the situation where they average down on structured warrants that is near its expiry. Oh my goodness. So
yes.
yeah.
And yeah, I mean, Shane, talking about expiry, I think a lot of investors, when it comes to trading warrants, a lot of them tell me the first thing they see is what? Premium. The second thing they see is volume traded. Somehow a lot of them, they forgot to check this thing called last trading day. If the warrant is going to expire in 2 days' time and you didn't realize, if you hold until expiry, and if the warrant expires out of money, whatever money you put in will become zero. So please check the last trading day before you buy this warrant.
Yes, like Cumming say, is a leverage play, and it's double-edged sword. If you know how to use it to your advantage, then you know how you can compound your double or your money. And then if you do it at the disadvantaged position against you, then of course you can also lose your money very fast. So this is a warrant is a leverage tool, so you need to trade it with cautions. So thank you so much, Cumming, for sharing your experience with us. What are warrants and how we can trade warrants? What are key considerations when it comes to trading warrants? So right now, we would like to proceed to our second session, which is by Kenanga Investment Bank. And before we go to the second sessions, for those of you who are joining in a bit later, asking us questions like you missed the earlier part, don't worry, you will receive the recording in your email, and you can also stream from our YouTube to watch from the beginning, so you can catch what Cumming presented earlier on. Okay, but if you have friends who haven't joined, you can also share our YouTube link to them so that they can learn about these structural warrants. So now that we've concluded the segment by Macquarie, so thank you so much, Cumming. We'll now move to a second segment by Kenanga Investment Bank. Our speaker is from Naga Warrants team. So Isabelle Chen is a warrants issuer and market maker at Kenanga Investment Bank since 2016. Prior to that, Isabelle was a Hong Kong warrants trader at Affin Hwang. She pursued her master's at the University of Exeter, and her first degree was from the University of London, LSE. So Naga Warrants by Kenanga is the #1 warrants issuer for single stock warrants in 2020. Isabelle, are you ready?
I'm ready. Hi.
All right, ready to rock.
Right, always.
Let me share. Let me stop sharing my screen, and you may proceed to share your screen. Over to you, Isabelle.
Hiya. All right, I got to share my screen. But thank you so much for the kind invitation, Bursa Malaysia. Mark Chan, Rochelle, Joey, thanks so much for having us. And also Shane, thank you for moderating this event from LifeChamp. My apologies. I have to mention that there is a mistake in your slides, Shane, because I did not update you. I am now the head of sales for all retail equity derivative products. Structured warrants are just one of the products under retail equity derivatives. So this is why I don't like webinars. There's no applause, no human interaction. Can I have applause? Thank you, thank you. Okay, very good. So sincere and genuine and spontaneous. Anyway, I'll get started. Personally, structured warrants, they're my favorite child in the retail equity derivatives basket. And before I was an issuer, you know that I was trading since I was 21 years old. So I am very, very technical. I'm very in the market. I'm not trying to sell you anything. I have no courses to sell, no books to sell. But I just think that warrants are very beneficial to somebody who has very little capital and wants to maximize on leverage. So let's get this party started. Screenshots, this disclaimer, you can read it later, use it as a screensaver if you like. All right, so the main thing about today is I want to break everything down. Warrants are a very complicated products. They sound easy because they are cheap, right? Their absolute price is very low. They start at half cent, 1 cent, so people think it's very easy to make, but actually it is not. So I want to break it down a tiny bit for you before we get started, all right? So our most valuable asset or commodity is time, right? So to save you on time, I want to teach you a trellis concept. So this trellis concept is something that is a trellis is what plants grow on. It is straight and orderly, and it's a framework to guide you on your learning journey. So the reason for this trellis, the existence for it, is so that plants, which is your learning, can grow and be lively and wild and creative. So what I'm going to teach you today is this thing, the trellis to trading. And the second thing that I want to cover today is a bit more on learning as well, which I think is very important, because I was told that this talk is mainly it's very beginner level, it's very retail, but I think this translates across all. I want you to question everything. So when you question everything, you need to ask yourself 2 questions. The first question when you want to trade is, so what? Actively ask, so what? How does this new piece of information on Supermax, Turbodynamic, G-Tronic, AirAsia, Trump, China, coronavirus, Brent affect my trading portfolio? Right? And the second question I want you to ask yourself whenever you consider any investment product or trading tool is, how do they make money? How does the issuer make money? How does the fund manager make money? How does the banks make money? How do stock market gurus make money? Do these stock market gurus that are teaching me how to trade, are they making money from selling courses or actually trading? Right, so how do they make? Apologies for my lousy handwriting today. I want to go really quick. So this is the reason that warrants are so fascinating. Everybody is so interested. This is the why warrants slide. As you can see, based on our Telegram, we actually posted this out. Sorry, you can't really see the numbers. So what we did was we actually noticed a rubber glove surge, and the date that I posted this one, you can tell it's proof. I posted it when Supermax was 168, 7 February, 168. 24 February, we posted another post in our Telegram, rubber gloves, 168, then 158. Didn't really move so much. The reason that I posted it at that time and our team, we decided on this particular counter before rubber gloves even moved is because technically it was doing this. Right? For those of you who are technical like I am, you would have noticed a rounding bottom formation over here and a breakout. And as you know, if it's a rounding bottom formation, technically, it is 1-1. Of course, it's gone one beyond 1 at the time, but the 158 that I posted over there was about here. After that, it continued to go to 397, continued to go to 763, but mainly it's the Y slide. These are the real returns that traders have actually made from trading Supermax C78, 8 cents to 2.99. As compared to Supermax itself, the underlying, which went from 158 to 763, which is Decent 383% is reasonable. It is something to pat yourself on the back. But 1,000 ringgit, if you actually put part of your portfolio into warrants, 1,000 ringgit, 3,600%. You do the math, all right? So let me address something really quick. So to those rumors that are on i3, talking about how issuers are losing money on rubber gloves. Oh, please, come on. Anyway, to successfully make money on warrants, it is a journey. So I always feel the more I prepare, the luckier I get. When I prepare, it means this. Preparation is trading skill. Preparation is also having the right tool for the right time. And in this case, it is warrants. On the bright side, if you're willing, if you're passionate, if you're hardworking, I'm more than willing to help teach. Yeah. Opportunity is if something like rubber gloves. And apart from rubber gloves, I like tech, which I'll talk about later as well. Because what's the point in talking about the past, right? I can't make money from the past. I'm looking at the future. What's happening now? June 27th until the rest of the year. What's going to happen? And of course, like I said, the more I prepare, when I'm ready for the opportunity, the luckier I get, the higher my chance of success. Oh yeah, and later on, I must mention that 2 to 4 p.m., I do have an advanced session for traders. And these traders actually made this returns, the Supermax C78. These are real traders. They bought it at 14 cents, if I'm not mistaken, and they were holding it past 3 ringgit. Right, so I have many people that come up to me and say, you know what, Isabelle, what if I miss a rubber glove rally? It was once in a lifetime, once in a decade rally, because coronavirus, it's only happened once, unless it's coronavirus, COVID 2019, COVID 2020, COVID 2021, touch wood, no, all right? What I want to show you is that there are other opportunities that existed in the past years besides rubber gloves. Hibiscus, 2019, see? So all of these things that I'm drawing over here, this is my version of preparation. I drew all of these things onto my charts, typed it out painstakingly. Whenever I see news, these lines were drawn by me. And if I did something as simple as this, bought here, sell here, support resistance, Hibiscus would have made 14%, right? But if I actually knew how to use warrants and its leverage to my advantage, I would have made 50%. Next slide. Same thing as well. What if I missed the rubber glove rally and out of all these things you learned, Isabelle, there are so many complicated terms that I will only be ready to put my money in 2021. Perfectly fine. For example, Public Bank 2018. Support, resistance, did your homework on the stock, knew it like the back of your hand, have a stop loss, right? At the bottom of support, as we all know. The thing is, warrants are very good for expensive stocks. As some of you may have noticed yesterday, we actually put this on our Telegram as well. IDSS is suspended in Malaysia until 31st December 2020. So what this means is that for a lot of retailers, they feel that stocks are going to get more expensive towards the end of the year because you can't short sell it. And that means when a stock is more expensive, let's say a $20 stock, the magnitude of gain that you get from a $20 stock to say $22, all right, see that? The magnitude of gain is very little. Make sense? So stocks may get more expensive, and it makes it harder to enter because of this thing that was just announced yesterday by Bursa and SC. I strongly advise getting familiar with warrants, or else we're gonna, I wouldn't say that here. Okay, same thing again. You don't have to have a bull stock to actually make money in structured warrants. Once you identify a pattern or a range on the charts, you'll see plenty of opportunities. Don't worry that you missed an opportunity and you feel that you have to chase. Let it go, okay? Like, you know the song, let it go. Boasting slides, thank you. Kenanga, we are the #1 this year for equity warrants. That means equity warrants include DRB, FGV, Supermax, Top Glove, all of these local equity warrants. We are #1. Macquarie's great. They're great for index warrants as well. They have Hang Seng index warrants, which we do not have yet. But we do have really great FVM, KL, CI, call and put warrants. Another boasting slide, first live matrix by a local issuer in 2019. Reason I'm putting it is because I have a great dress on over there. So let's simplify it now. Today is beginner level day. Warrants are very, very complicated, but they are very worth learning, as I showed you earlier. So I imagine today I want to share with you how I would actually recommend warrants, recommend trading strategies to my younger 21-year-old self, or my friends, how I would recommend warrants and how to learn how to trade warrants to my friends who have lost their projects, who've lost jobs, who need a second side income source during this COVID MCO period and are hungry to learn, but have very little capital. No harm in that. We can teach you, all right? If you want an advanced level, I can cover that as well. But later I'm going to show you a bit more advanced level stuff. I won't scare you off just yet on our first webinar together. Okay. So the big picture goes like this for me. Don't worry, I see Gavin Koda in the chat. There is an advanced level. I'll show you a bit more after this, okay? Have some patience, not everybody's advanced as you. All right, so big picture. There are courses that you can attend. There are events, there are books, there are news apps. I like CNBC, GTN, and I love, love, love BFM. And research reports you can read, and there are trading gurus. But out of all this information, you can never finish reading everything. I've tried. I try to read 2 to 3 books a month. I go for 2 to 3 webinars a week, and I go for courses as well. I think since I've started trading, I've actually paid for at least 15 technical analysis and fundamental analysis courses, full-length ones. So you're constantly learning, right? You're constantly absorbing all of this crazy information, but what do you do with it? It needs to go here. You need to summarize it into your checklist. This is my own checklist that I've written. Isabelle's Don't Be Lazy checklist with all the stuff about technical analysis. I can send it to you if any one of you message our Telegram, I'll send it over, but you can read it. I find intro very important, moving averages, Japanese candlesticks, and I like FIBO and Elliott wave. So the second part of that is you need to have a scanner system. So a scanner system is very useful for generating buy and sell signals. SI station, I like using that because this allows somebody who is as obsessive like me, who dreams of charts every single night, to actually program your own indicators. You have a lot of others. You've got Grand Pine's algo box that looks at fundamentals. You've got Art Trading System. You've got FIAVest. etc., etc., etc. The thing is, when people start using a scanner system, my advice is to not use it blindly. I think that is very risky. You need to actually know the background behind the scanner system. That's why you need this whole checklist of technical analysis. Or else the scanner system can also be fooled. It can have fake buy, fake sell signals, Wyckoff up thrust, down thrust, bull trap, bear traps. So please understand the TA behind it, the technical analysis behind it before you actually use these scanner systems. They are great, they are convenient. I love tech, but it's your slave. Tech is your slave. Don't let it do all the thinking for you. And finally, the outputs. Out of all of these things that we've looked at so far, you've got this part, all the inputs, you've got your checklist, you've got your scanner system. These are the only things that you want. You want your entry price, right? Stop loss price, take profit price. And instead of getting the stock, you would consider getting the warrant instead, using the MESTI strategy, which I'm about to teach you. So the bottom line, out of all of these things which you've learned, right, this entire big picture of stuff, the bottom line is, can you make money using these things, right? Just a side note, what I like doing so these are my own notes on the Bloomberg. Yeah, I do take a lot of notes because I'm a very forgetful person. So, hold on a second. Yeah. So I am a very forgetful person, so I like writing all my own little notes on the screen. I'm not going to show you because I'm embarrassed of my messiness. But something that I like doing that I realize not a lot of people do. I like looking at, so the fundamentals, I like using the FATA system, right? Fundamentals first to choose a good stock, technicals to decide on my entry, exit, stop loss. So I will realize there are a lot of analysts that do all that fundamental work for me. And I know a lot of you look at them as well. Say this is Supermax. So I've got analyst 1, who has a target price here, for example. Analyst 2. Say analyst 3, okay? The thing is, I don't blindly believe analysts either. So what I like to do is, I will actually go and plot the performance of this analyst and backtest him. Does that make sense? All right. Finally, the juicy stuff. Warrant trading strategies. So you must know the Musty concept, M-E-S-T-I. You must have Musty, Musty ada Musty, all right? Only 2 issuers have a live matrix, Kenanga and Macquarie. And if you forget all of this, what I want to show you right now is this. So this is my Telegram, our Telegram channel on Naga Warrants. It's called Naga Warrants by Kenanga. And it is live right now. I'm scrolling it. Yes? So if you ever forget all of these slides, because honestly, if I sent you the slides, I know most of you will ask for the slides and you will never look at them ever again. So here's a summary of it. MESTI strategy. Step 1, choose a great, I'm looking over here. Choose a great underlying share. You can use FATA, fundamental analysis, to determine if the stock's intrinsic value is below its current price, right? Then you use technical analysis to determine whether it is a good entry price, target profit, and stop loss price. Second bit, M. M stands for matrix, live matrix. Only 2 issuers offer it. It is a direct feed from our market making systems, and it's a price table like coming from Macquarie shared with you earlier. But I'll go into a bit more detail of how you can use it in a smarter way as well. So first thing we want to touch right now is actually effective gearing. So it says over here, effective gearing, Inari C57, for example, you can see I'm looking over here. Inari C57's effective gearing is 3.28. That means if Inari itself goes up by 1%, Inari C57 goes up by 3.28. So a lot of people will say, easy, Isabelle, easy lah. Just choose the highest effective gearing, correct? But no. Effective gearing is great for long-term traders that are not so worried about tick fluctuations. Like if you look at this part just now, I'm looking at time horizon, correct? If you're a long-term trader, you want to, all right, let me describe it a bit differently. This time horizon strategy is slightly like your Facebook quizzes. You know those Facebook quizzes that ask you, which Star Wars character are you? Which Marvel superhero are you? So you need to decide from the very start, when you enter a trade, which trader are you? Are you a long-term trader, medium-term, short-term? Are you a day trader? The difference is all of these focuses, they all include components of the Musty. All of them must have the M, the live matrix. If you are a long-term trader, you'd be focusing on effective gearing. If you're medium-term as well, effective gearing. If you are short-term, you're looking at, I would like people to look at sensitivity, that's the ticks. See how important it is, the live matrix, to show you the tick sensitivity. Anyway, backtracking, right? Let's go back here. So once you choose a warrant with very high effective gearing, the problem is its sensitivity is very poor. Let's use an example. This is our website, nagawarrants.com. It shows the warrant scanner. And today, what do we have on? All right, Inari. Inari. Give me a sec. I want to show you something in the real world. For me, I don't really like talking about theory so much because I want to know something that I can use on Monday, you know, trader style. I don't need a PhD in warrants. I just want to know how to make money, right? Okay, so Inari. First thing I would do when I'm on the warrant scanner page is sorry, I just saw a Q&A question that I really want to answer, but later. Have some patience, Isabelle. All right. The thing is, say Inari C53, M, the first concept, the first acronym, the first letter of Musty just now, it meant that you need to choose the warrants with a live matrix. So I would choose these warrants. I would like this one, this one, this one, this one, because they're live matrices. So I know the price, the fair bid, fair ask price. So effective gearing, 907. That looks pretty great, right? Over here, 907. But the problem is, if I look only at E and I forget about S, MESTI, 19 ticks. That's crazy. No, I don't want that, right? That means it flips very slowly. But you notice if I choose something that is too sensitive to ticks, say I'm choosing something over here, the effective gearing is actually much lower. Here it's 11, 10, 9, 8, and etc. But you see how there is a difference between effective gearing and ticks. There is the, what is this word? You need to balance it out. The goal is to have a warrant with high effective gearing, which is at the top range of the scanner, but have enough ticks to flip. That means they flip very fast, very little ticks. So you want high effective gearing and few ticks. You want a balance of these two. The thing is, warrants that are very cheap, they're very high effective gearing. So if you look here a tiny bit, sorry, market is closed, right? Warrants here are the very cheap range, and here they become more expensive. So warrants that have very high sensitivity, they tend to be very expensive. So I know everybody here wants low absolute price. So it's kind of a little balance game you need to do. All right, back to it. What is the next thing I need to look at, Isabelle? I understand effective gearing. I understand sensitivity. I understand the balance between effective gearing, and I understand the balance of having sensitivity as well. I want high effective gearing and I want enough tick sensitivity. That means I want few ticks, right? But what does this ticks thing mean? All right. So the MESTI, we are on the S part. When you look at a live matrix by Kenanga, you want to pay attention to these things. Firstly, you want to quickly eyeball on the color of the highlight, the traffic light. Green, good to go. Amber and red, if you're a beginner, I would say no. Avoid for beginner. But I know many of you are advanced as well. And the advanced people may consider a red, may consider an amber. Okay, green is, of course, everybody can trade that. But today I'm not going to cover, maybe during the Q&A, I can cover exactly how to trade warrants with an increased ask. But for beginner level, if you're in the pink section here, just avoid, stick to green. So if I was a beginner, the pink color guy, I would avoid this one already. And of course, I'll answer the question, what if I actually bought a warrant when it was green color and then suddenly it ran out of inventory? And then the issuer posts a low inventory alert. What do? I'm stuck. It was green and now it's yellow and suddenly it's red. I'll tell you how to do that later. Hopefully somebody asks me that during our Q&A later, all right? Okay. So Penta CL, how do I use this live matrix? What I really want to attack is if I want to buy Penta Master, number one, I already did my FATA on it, my fundamental analysis and my technical analysis on it. Number two, I must choose a warrant, right? So the accompanying warrants that perhaps I could choose would be this Penta CL. And what is this, the great thing about this gray and white? The gray and white lets me see very easily how many ticks this warrant has. all the ones in the white are 5. You can see, right, there are 4 levels. Here 4, here's 4, here's 4, here's 4. That means this is a 4-tick warrant. Well, maybe 5 with the exception of this one, but it's mainly a 4-tick sensitivity warrant. That's what it means. It means that this whole range, see how they're all the same price? We color coordinated the same prices. Make sense? Okay. So if I do want to enter into a warrant, what I would do is I would like to go for the highest possible price. If I want to enter, I would enter here. Why would I enter over here? When the underlying is 532, I can, if I see a lot of sellers topped up at 534, I might as well wait until the sellers reduce at 534. So when I buy over here at 12 cents, it will immediately flip to break even when the underlying goes here, right? So here's the penta, bid, penta, ask, CL, bid, CL, ask. I would have conducted my technical analysis, and let's say I do a Fibonacci projection, and I think that penta CL, for example, this is not a solicitation to buy anything. I'm just saying, for example, I think that my target price for penta is here for the underlying. I will know that, no, actually, you know what? Let me change it. Let me make it a bit harder for you guys. Let's say I know that my target price for penta is 545. I plot there, okay? So I know correspondingly, the warrant on that day, for example, would be 13 cents. These warrants do get refreshed, by the way, so remember to keep refreshing them. If I can enter at 12 cents, and then I want to exit at 13, when penta is at 545 on bid, why not? I just aim for 543. I can also exit at 13 cents, right? That's the beauty of the live matrix. It also lets me put a buffer. Hi, I can see all of you guys messaging me on my our Kenanga Telegram. Thank you, Naga Warren, the best. I saw that. All right, later, all right. Where was I? Sorry, I get distracted. All right, so buffer. If I bought it at 12 cents here, let's choose a different color. Here, and my stop loss, I can use the live matrix to position a stop loss at, say, here 11 cents. Then I know that correspondingly the underlying stop loss is here, right? So even if it drops to 529, I know that I still have buffer before my warrant actually drops to that price. Yes? No? All right, I hope it's a yes so far. If not, if you really want, I can do, this is beginner level, I can do a beginner. Okay, if you get enough people, enough friends, and you write to our Kenanga Facebook, I will do a beginner. If you want to do an advanced, I can do an advanced. I'm flexible. Okay, back to it. Everybody all right so far? The chat seem okay? I'm sorry I'm going very fast. I only have 40 minutes before the Q&A session and the Kahoot session. So I am a bit faster than I usually would. If not, I would look you guys in the eye and see whether you really understand. Okay. Yes, I can give the checklist on this. I can send the slides over. Maybe next week, let me beautify my drawings a bit for you, okay? And then I will send it over. So M-E-S-T, we've done the T already. S-T. All right, so T. Right now, we're using Pentamaster again. I've already decided that I, for example, want to enter Pentamaster. Okay. Reason for this, whatever it may be, I think it's fundamentally strong. Technically, there's a signal, or maybe my scanner showed me a signal already. Just now I mentioned all the fear vest and whatever, right? So let's say I'm using the SI station one. It has actually showed, for example, buy signal. Whoa, I actually have buy signals here and here and here. And okay, I want to consider entering it, right? It's alerted me and I look at it, I draw my own Fibo lines, and it suits my Bollinger Bands, it suits whatever you want to look at, right? And I already decided I want to go into Pentamaster. But to use a different vehicle to capitalize on Pentamaster's growth, because Pentamaster is a $5 stock now, I will use warrants instead. So I look at Pentamaster, I perform technical analysis on Pentamaster, but I enter the warrant instead. Okay. So when I choose to enter the warrant, what must I buat? I must look at M-E-S-T, and currently we're on T. M has all the Kenanga warrants already on it. I won't go to the scanner again, it's a waste of time, but just trust me, these are Kenanga warrants. On Penta, this is Penta, Penta CL, Penta CO. You can fact check me later, go ahead. I have confidence in my facts. All right. If I wanted to enter this buy signal over here, or this signal, or this signal, you could buy whatever your heart desires, all right? T means what? Oh yeah, sorry, I forgot to show you this. What does T mean? T means sufficient time to expiry. You see this? The red exclamation point. Let me show you again. Sorry. Okay. T says, avoid trading or holding a warrant with less than 1 month to expiry. Let's say a warrant has 6 months until expiry. Can your stock price, can Pentamaster hit your TP? Let's say your TP is here, okay? Can Pentamaster hit your TP in 5 months? So what I would do is, I'm a very forgetful person, I would draw all of these warrants as so. I know that CT only expires here, CL expires here, CO expires here, CL expires here, and I'll draw red. You see that red part? That is the last month before expiry. So I kind of look at it and I say, Pentamaster, if I entered it here, because you need to remember that looking backwards on a chart is very easy. You need to actually remember that you can't see any of this stuff. When I'm here and the buy signal came out, I can't see any of this. I have no idea. Right? People who can't foresee the future, it's not possible, all right? There's just technical analysis, all of these things increases your probability of winning. It is not a guaranteed thing. It reduces your risk and it improves your probability of success. So let's say I entered over here and I'm looking at my time frame. Maybe I think, for example, person number 1. Choose a different color. Person number 1 here, he thinks that Pentamaster is going to go like that. So he would choose CT. Person number 2 thinks that C is going to go like this. Right? They can choose a different warrant. But the thing is, you need to choose the MESTI strategy. This is just to explain the T part. Okay. Issuer, last bit. MESTI, right? Can we use gearing instead of effective gearing? No. You know, I summarized everything into MESTI. E actually stands for effective gearing, and effective gearing is gearing times delta. Delta is a very important component of warrants. I'll address it later, but that's why we use effective gearing. Jia Sun Jia. All right. So of course, let's quickly wrap this up. Choose a reliable issuer, cutting edge, approachable, reliable, very charming, very generous with her information, has some wisdom, has some insight into warrants, but is smart to know that she also can be very dumb, okay? Choose a warrant. Everything in warrants is very dynamic. So a website with a live matrix, I'm reading from here now, is best. A website live matrix, not an old screenshot live matrix. So Kenanga equity warrants, they come with live matrices. Our FBM KLCI index warrants, you can get the live matrix on our Telegram over here. And if you need a more slow, less powderful English Isabelle session, you can watch the video, this 2-minute explanation video over there, okay? What else am I covering today before we wrap up? Common mistakes. Yes. Common mistakes, very easy. Common mistakes is when you don't learn from the mistakes that Isabelle mentioned. Because trust me, I have made every mistake in the book. Common mistakes happen like this. Sorry. How am I for time? What time is it now, yeah?
Yes, now it's about time for you to do Q&A.
It will be. Give me 5 minutes, I promise, Jane, and I will wrap up, okay?
All right.
5. Okay. Common mistakes. Common mistakes number 1 is when you buy warrants from an issuer with no live matrix. I mentioned the 2 issuers that have live matrices. So, second mistake under M is when you don't look at the gray and white area. And then there's a lot of gray and there's a lot of whites, for example, in the live matrix just now. Right? Sorry, this is very time consuming. I shouldn't have written this. All right, there's a lot of gray. There's so much gray and there's so little white. That means it's a very slow to flip warrants. Maybe here could be 20 ticks. That's another mistake. You don't look at the gray and whites on the live matrix. Third mistake for M is you buy the red and not the green. I always say green. Hi, Akhil. Hi, all. Green, right? You bought the red matrix when it's at the high of the matrix. The red means that, the green means that the bid and ask is very tight, 1 tick apart. When it's red, it means that my left hand doesn't move. This is my left hand. My bid, the issuer doesn't move the bid. I increase my right hand. So when there's an increased spread and you're buying something over here on a high level of the ask, my right hand, it is risky. So for a beginner, stick to the green matrices. E, you want to look at E and S together. You want to buy cheap Yes. But you want to watch the ticks. The mistake comes when people buy the cheapest warrant, for example, a half-cent warrant, and they think when it flips, they'll make 100% because half cent to 1 cent, correct? But they don't realize that the ticks for this kind of warrants can be something like 50 ticks, 20 ticks. T. People forget about the expiry date. So my solution to this, see, whenever I give you a problem, I also offer the solution for it. Remember this thing just now that I showed? The blue color means the last 2 trading days before suspension. Remember that there is a suspension period before the warrant expires. Okay, so I just put that in blue just to remind myself if I really want to hold until the last possible moment. And oh yeah, just FYI for those who are asking the questions, even out of the money warrants, even if it's out of the money expiring, you can still sell it at a fair price before expiry. The thing is, once it crosses this line, then it expires worthless. So until this blue line, you can still sell a warrant that is very deep and off the money back to the issuer. And finally, I. The mistake about common mistakes is that that traders are too shy to ask issuer questions. A lot of people, they call up my hotline. I get about 20 calls a day. I get 20 WhatsApps, 30 telegrams. They're too shy to ask questions. I'm all right to answer questions, but you need to do your own homework as well. Don't ask me things that, okay, ask me stuff, but if it's already on a telegram, please read as well, okay? And the only times I usually get calls from people, this is too shy. Some people who are too shy is when, say, they lose money, but then they never learned all of this MESTI things. And then they blame the issuer for losing money because they bought a red color highlight warrant. You know, when people do stuff like that, it really hurts my feelings. Okay. Finally, risk management factors, really fast. I am going quick, Shane, last slide. Okay, so control the risk, that's the main thing I want to cover with this slide. Limited lifespan, we've already covered that. Warrants have a limited lifespan, meaning they expire, and the last 2 trading days that I showed just now, this thing, remember? You can actually lower the risk if you use the T in the MESTI and draw it on the chart. If you forget, set a calendar alert. And notice that how I say you must always sell the warrant when the underlying hits the underlying target price. Okay, you would do technical analysis on the underlying, not on the warrant. And there's no need to hold until expiry. You just see the red zone when it comes across, hits your target price, you can sell it back to the issuer, no problem. All right, you don't have to convert it. I hear my stomach grumbling. All right, so limited lifespan, you can lower the risk. Leverage risk. Leverage means a small change in the underlying causes a massive change in the warrant, right? So my idea to risk manage this is to always have a stop loss and get familiar with technical analysis and basic support and resistance at least. So it's in the Isabelle checklist just now that I showed anyway. So you can lower this risk as well. Currency risk, if the price of the underlying is denominated in a foreign currency, you'll be subject to foreign exchange rate fluctuations. And local equity warrants, they don't have such exposures. So I can say this for the warrants, Market risk, it's a market product, don't be silly. Yes, there is market risk. Liquidity risk, this is why you have a liquidity provider who is charming, reliable, approachable, cutting edge, who you can always call if you want more liquidity on a warrant. You want more on the bid, you want more on the ask, you call the hotline, you speak to somebody. So low liquidity risk. Defaults on market making obligations, nothing is impossible in this world, as we know, but it is unlikely with names like Malaysia's Because Bank, Maybank, CIMB, RHB, unlikely. Extraordinary events, Black Swan. If you like Nicholas Nassim Taleb's book, you'll know what I'm talking about. Possible. Everything is possible in this world. So finally, that wraps it up for me. Just some final housekeeping things. Thank you for your patience. In my advanced level webinars, where I will answer all of these things, if you like this session, please write to Kenanga Group's Facebook. The reason is so I can get allocated a budget to do more webinars. Okay, so in my bonus advanced level webinars, I've summarized everything. I've been an issuer at Kenanga since 2016, but I've only been speaking in public since 2018. And I realized there are a lot of repeated questions. So I've summarized all of my questions that I've received over the years here, and I've categorized them accordingly. Sorry. So let's say, all right, because if you're willing to ask, you want to learn, I know that was pretty beginner level, now it's advanced level. If you want to learn, I'm willing to teach. I get a lot of these questions. What's the difference between liquidity and turnover? I've structured it into these bits: structured warrants, strategies, warrant tools, live matrix tools, issuer, expiry, corporate adjustments. I realize these are the big themes that people always ask me when it comes to trading. I mean, trading structured warrants. So I always get this question. I get this question a lot. How do I select warrants based on other money? Shouldn't I be looking at implied volatility, historical volatility? What else is there? Can I have a guided tour of the website? What do I do if I bought a warrant when it was green and now it's amber or it is red? What if I really, 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 really want to buy an amber or red warrant? If I win, does the issuer lose? Always a good question. That's the main question you need to ask about issuers is this one. I really like this question. What are the 3 ways issuers make money? 3 ways. We make money from the spreads, we make money from delta hedging, and we make money from time value. Corporate adjustments. What happens to my warrants? Okay, so these are all in advanced level webinars. We have a private chat on Telegram. You can message us there. It's Naga Warrants Issuer Team. I can just go to our website. Everything is on the top bar. We also have Naga Bytes. If you message Naga Bytes, N-A-G-A Bytes, and if you like the quotes that I've been sharing earlier, we send out a quote every single day, Mondays to Fridays on market days. If you message Naga Bytes, we will put you into our list and we will send it to you. So that is it. Summarize of everything that I've shared in the last few minutes. What do I need to know? You musty, tau musty. Oh, what an ugly color. You must know Musty. And you must know the website. Everything is there. Finish. Thank you so much for waiting, Shane. Thank you so much for joining us, everybody. Q&A. I'm ready.
All right, cool. We actually have only 2 minutes left for Q&A.
Okay, worry. Well, I guess, yeah, I'll try.
Isabelle, you can help us to take the questions during when we were doing enrollment for the quiz. You can still answer questions during the enrollment of the quiz.
Yes.
So that we maximize the time here. All right, so Isabelle, you can go to the Zoom webinar chat group to find the question and answer. So if you have any question to ask Isabelle, please write in the Q&A box in the Zoom webinar, but not the chat group, okay? Because chat group, we have so many messages coming in. So write in the Q&A box so Isabelle can take your questions. If you're streaming in from YouTube, write your questions in the YouTube chat box. So our team will screen some of the questions to ask Isabelle during the quiz setup later. Sorry, Isabelle, over to you to take the questions.
Okay, I'm gonna run through them as fast as I can. Let me do this for you. The questions that I put on this bit. Give me some time. I will write down the answers. So if your questions on the Q&A part are in here, I will put all of these answers to all my questions over here. I'll put them on the website so you can read through them slowly. Okay, all right. So let me address the Zoom questions really quick, and I have the YouTube questions in front of me.
Yeah, can you just take like 3 questions on Zoom while we
so both speakers used Inari as a case study. Is it something we should take note in near term? Up to you. You tell me. You show me a technical analysis, Siong Kak Tan, and we will go through it together. That's my answer. I like tech for the next sector. What is the difference between gearing and sensitivity? I've shown that. Maybe I would need to have a beginner session with you, Sua Chun Kang. Sorry, where is? I'm scrolling. Oh, there's a lot of questions, guys. All right. Hi, Isabelle. May I know how long it takes for warrant bid-ask price matrix will revise before maturity? Do investors need to track daily for such changes? I can give you a hint for this. Okay. What I would do is, I would put in theta here on the warrant scanner, okay? So this is how much theta. Do you see this thing on the side? This is the time value decay every single day in cents. So you see the warrant, they're expiring in 3 days. This top one. The theta. Of course, you don't really see it sometimes because it is in 4 decimals. Maybe that's why my eyesight is so bad, because I look at 4 decimals. But that's what it means. When it's closer to expiry, the time value decay goes gradually higher. But this tool in my website, it is very helpful for this question. Do I care about exercise value when choosing warrants? This is a out of the money, at the money, in the money question. So I would like to choose more of warrants that are around the at the money range because the delta would be highest. If the warrants expire, do they auto close your position? Warrant expires out of the money, you get a nice big, and in the money, you get a cash settlement. See, I'm getting a lot of warrants expiry questions. If you don't sell it, will it burn? The thing is, I think I've addressed this earlier. You are not buying a warrant to hope that it will expire in the money. You are getting a warrant because you want to utilize its gearing and its leverage and its access to the underlying. So when the underlying hits the target price you want, then you would sell the warrant. You don't wait until expiry date. For me anyway, if I was a trader, which I used to be, then that's what I would do. All right, and if any other questions, I will do my best to, I think the time is up. I can see my team nodding. When the next week swings around, I will summarize all of these questions, I promise you, and I will post it up on either Telegram or our website, nagawarrants.com, and I'll try to answer as many questions I can because there's just too many. All right, Shane?
All All right, thank you so much, Isabelle. You can still take on questions later when we are doing the enrollment of the quiz. You can take on questions from the YouTube or Zoom when we are doing enrollment of the quiz. All right. So thank you so much, Isabelle, for your wonderful presentation on warrants trading strategies. Okay, Isabelle from Naga Warrants, Kenanga's investment bank. So let me just briefly share my screen so that we can proceed to the very exciting agenda, which is our quiz. All right, so right now we're at the moment where we want to challenge you to see whether you are paying attention to what our two speakers presented just now from Macquarie and Kenanga Investment Bank. So the quiz, there will be about 15 questions quiz, and the top 3 winners, the first place will take away Apple AirPods Pro. The second place will take away a Philips Air Fryer, and the third place is going to walk home with a Amazfit GTS. However, the quiz is only open for webinar registrants. So a good news is that if you have not registered for this webinar because you happen to stroll along on YouTube, then you kindly quickly go to https://tinyurl.com/Bursa webinar. SW stands for Structured Warrants. Okay, so if you have not registered for this webinar, please quickly go to tinyurl.com/Bursa SW webinar, so you are eligible to be in the running to win the prizes. Okay, so it's only open for webinar registration. So for those of you who are streaming in from our Zoom, you're definitely registered. For some of you here who happen to stream on our YouTube, because you have not registered and your friends share you this link, you watch on it, or kindly quickly register for this webinar so that you are in the running to win the prizes. Okay, so let me briefly go through the housekeeping rule for this quiz. Okay, sponsored by the prizes are sponsored by Bursa Malaysia. So the quiz is hosted on this platform called Kahoot. So step 1, you are going to go to the browser www.kahoot.it, or you download the Kahoot app from Google Play or App Store so that you can answer the question on the browser or the app. Now, the key here is that we strongly recommend you to use a second device, such as your iPad or your iPhone, to play the Kahoot app. Okay, you could be streaming in from your desktop or your laptop, or you can stream in your mobile. But to answer the quiz, we recommend you to use another device to answer the quiz so that you can have a faster response. Okay, so you can go to Kahoot, go to the Google Play or App Store to download Kahoot app so you can answer the quiz. So this is the first step. So second step is you want to key in the game pin shown on the screen. We have given you the game pin in the chat group, but later I will show the game pin on the screen. So the third step is after you key in the game pin, you'll be able to enter the quiz. So after you enter the quiz, please enter your full name as per webinar registrations. If your webinar registration is like me, Chun Xian, then you need to write Chun Xian. Okay, you don't write your Christian name like Shane, then we cannot find you. You get what I mean? So you write if whatever name you use for webinar registration, use back the same name so that we'll be able to track you. Okay, when you win, please use your same name. So there will be 15 quiz questions shown on my screen later. So what you need to do is you pick the correct answer on your browser or through the app on your mobile device. Okay, you can use your browser to answer or your app. So I would recommend that. I think app would be faster because you have a separate device to answer the questions. So the ones with the most number of accurate answers within the time limit, which is 20 seconds, and the fastest response will win. So there will be a total of 15 questions. So each question has about 20 seconds. So if you do not answer it within 20 seconds, of course, then you will be you did not answer the question. You don't have marks. So the one with the accurate answer will have points, and the fastest response will have higher points. All right. So that is the housekeeping rules. So remember, first step is to go to Kahoot.it or download the Kahoot app from Google Play or App Store. Key in the game pin on the screen, enter your full name as per webinar registrations, then you'll be able to enter our quiz. Okay, I'm allowing about 10 minutes for the quiz setup for you to enroll into the quiz. And in the meantime, Isabelle can take on questions from our YouTube or the Zoom. All right. So on our screen, we have 100 active players, okay, who are ready. Okay, while we are waiting for everybody to come on board, Isabelle, you can take over the Q&A for a moment.
Hi, sorry. First comment, I do hope somebody wins the AirPod Pros because they're really great. Okay, questions. All right, I see a lot of people asking for beginner sessions and advanced sessions. Do you mind, perhaps we'll try to summarize it a bit more, okay? If you want to join. Let me see the Q&A part again. Is 7 to 8 ticks for warrants considered bad? It depends. All right, so if I go back to my slide just now on the MESTI on Telegram, if your stock can move a ringgit a day, then a 7-tick warrant is perfectly fine, right? But if your stock only moves 2 cents a day, like a Sapura or an Armada, then a 7 to 8 tick warrant just won't cut it. If your stock moves like Inari, 10 cents a day, right? 10 cents a day, then you would kind of want to have a 2 to 3 tick warrant. Then you can at least break even, make, right? Yes, the information on Naga warrants is free to access. www.nagawarrants.com. It is a free website. You can be using any broker. You can be using RHB TradeSmart. You can be having a Malacca Securities account, a TA Securities account, a Maybank account, a Hong Leong account to buy Naga warrants. They're listed on the market. So you don't have to have a Kenanga account to trade Kenanga warrants. It doesn't work like that. What about kangaroo time? I love that. So CNBC, they've coined this term, bull trend, bear trend, or a kangaroo trend, right? It's hilarious. Question is, would kangaroo time be a problem? Not so much if you trade, you know the range of it, right? It is very clear the range of the Malaysian stock equities, and you have your technical analysis, stop loss in place, and a target profit in place. I don't see why kangaroo time is a problem. If I was a warrant trader back in the day, or as you are now, I would love volatility. Warrant traders, we love volatility. We don't like it when things are boring. Is there a live recording for this? I'll let Shane handle that. We've got about 495 players in Kahoot.
Yes, there will be a recording sent to all the registrants.
All right, so some people ask, is it best for intraday then? It really depends. All right, so if you are a beginner to warrants and you have very little capital and you need to keep on actively trading, then intraday, yeah, you protect your capital more. But for me, personally, I would like to go into a stock when there is a confluence. A confluence means when technical analysis says go, fundamental analysis says go. Technical analysis, I've got a Fibonacci retracement line over there. It's crossing with the support line. It is crossing when the price crosses above the moving average, and there's a Japanese candlestick reversal pattern. Many factors join together, and then it's a clear buy. So then I will be safer and I'll be willing to hold the stock for a longer period, and I'll be willing to hold the warrant for a longer period. But some people, they chase. And when you chase, you need to be a bit more careful, and that's maybe for intraday trading. But you can only benefit from the great gearing and leverage and make that Supermax crazy return, or even a 50% return on a boring, expensive stock like Public Bank if you hold it over a period of time. So I hope that answers your question. It really depends on the stock that you've chosen. Whenever I have friends that come up to me and they ask, what is the first thing I must do, Isabelle? I really don't know, I'm jam. You know, there's so much information. Okay, I get everything. I get your big picture just now with the warrant scanners and everything, with the books and the course and the gurus. But what do I do now? I would say choose 10 stocks. Choose 10 stocks and make them your babies. You can choose 3 rubber gloves, 3 tech, 2, everything's a bit boring now, isn't it? 2 banking and maybe 1 telecommunications, whatever you like. Okay, maybe if you work at, you work in IT, then maybe you're more familiar with IT, then you can choose whatever stocks. So what you do is, what I say is, you perform the fundamental and technical analysis and you draw like my little notes on all of those, 10. So whenever you read on the Star or you read on the Edge, well, the old Edge, or you read on the news and something comes and it affects you, you must always ask yourself, so what? Does it affect my 10 stocks? So you get so familiar with it. If say AirAsia is one of your stocks, every time you read news about AirAsia, you would know what it affects. And if you're very forgetful like me, you would go and put notes in there, right? So that's how I would do it. Sorry, Shane.
All right.
Yes.
Cool. Okay, thank you, Isabelle. So we will just allow 1 last minute for you to enroll. We'll be starting the quiz in 1 minute. So the last minute for you to enroll if you haven't gone into the quiz yet. All right. So Isabelle, you take 1 last questions.
I want to answer all actually. Okay, selection. Okay, actually you look at the YouTube, right? This is interesting. All right, do you have any good suggestions or good books on warrants that are easy to understand? No. Maybe the best way is, all right, like I said, I am planning to have a webinar series on warrants and hopefully that will assist.
Okay.
Bursa is asking, oh, wait, sorry, go on.
All right, so I think it's time for us to start the quiz. Are you guys ready? All right, so we'll first do 2 questions on the demo. So the first 2 questions carries 0 marks. So after that, we will proceed with 15 questions that got marks. All right. So with that, I want to thank Isabelle for answering all the questions while helping us, allowing us time to set up this quiz and allow enrollment of the participants into the quiz. We have more than 500 people joining our quiz right now. Thank you, Isabelle.
No problem. Thank you, Shane. I can answer all day.
Yeah, I think there's still so many questions for you on YouTube. There's also so many questions for you, but we can only take so much. So if you don't,
one lunch.
If you haven't had the chance to answer a question, don't worry. You can still reach out to the speaker with their email or join their Telegram to ask the speakers the questions. So while we have more than 540 people who are on our quiz right now, so on the count of 3, we're going to start. Okay. So are you ready? So 3, 2, 1. All right, so on your screen, you are going to see the screen, see my questions on my screen and answer the question on your device. Okay, the first question is, this webinar is brought to you by Bursa Malaysia Berhad. Is that true or false? All right. 5 more seconds. These are test questions that carries no mark for you to familiar yourself with the quiz. All right, there are 339 people answer true, while 36 of you answer false. Okay, while still got the 200 people did not participate in the quiz yet. All All right, so this is the first question. I'm sure that now you're a bit more familiar with how the quiz is going to be conducted. So leaders board, all right, so all of you got 0 marks, okay, because this quiz is just a test, okay, doesn't carry any mark. So let's go to the second questions. Okay, which of the following products is listed on Bursa Malaysia? All right, answer the question. The fastest response will get mark. Okay, of course, this is just a test questions. It won't carry any marks. All right, so the correct answer is Structured Warrants. Okay, there are 338 of you who got it correct. All right, if you answer something else, then you must really think, have you been paying attention, okay, in this webinar? All right, so now here comes the score, okay? Are you guys ready? Steady, bon pipi, okay? Are you guys ready? Okay, so the following 15 questions will carry marks, okay, and that will determine who are the winners in this quiz, okay? We are going to start in 3, 2, 1. First question, structured warrants enable you to gain the same effective exposure as buying the shares due to is what? A, premium, B, implied volatility, C, gearing, 3, time decay. All right, the answer is gearing. Okay, so we have 263 of you who got it correct. So yeah, so let's go to the scoreboard. So let's see who is the top winner here. Okay, the top winner here is Kit Leng Tay, who got a 1,155 marks. All right. So are you ready for the second question? So let's go. A put warrant gives you the right to what? Underlying at a fixed price is value questions as the underlying price goes down, okay? All right, the correct answer is sell and increases. Okay, so let's see who is the winning. All right, the leaders board is still Kit Leng Tay. It's leading in the leadership board. Okay, so let's go to quiz questions number 3. It's a true or false question. Investors will receive margin calls when the share price falls below the call warrant exercise price. The answer is false. There are 268 of you who got it correct. Okay, let's go to the next questions. Leadership board is still leading by Kit Leng Tay and Letitia Yeo. Third place is Leg Gek Peng. Okay, so let's go to the next question. Assume company's A current share price is 5 ringgit. If the exercise price of call warrant A is 4 ringgit, call warrant A is what? In the money, out of money, at the money, near the money. The answer is A, in the money. All right, there are 242 of you who got it correct. So let's see the leadership board. Wow, the #1 place overtaken by Letitia Yo. Congratulations. So are you ready for the next questions? When is the last trading day for call warrant Z, which will expire next Tuesday, 30th of June 2020? The answer is C, okay, Friday, 26th of June 2020. Okay, so let's refresh the leadership board. Wow, second place and third place got replaced by Muhammad Maharaj, if I pronounce your name correctly, and Madeline Tan. Okay, the first place is still Letitia Yo. Are you guys ready for the next question? Assume put warrant X has an effective gearing of 4 times. How will this warrant move if the underlying price decreases by 4%? Okay, is it increased by 8%, increased by 16%, decreased by 8%, or decreased by 16%? All right, the correct answer is increased by 16%. All right, so let's see the scoreboard. Okay, wow, #1 place overtaken by Muhammad Bahaj. And also #2 is Muhammad Haj. #3 is Madeline Tan. All right, keep up the great work. Are you ready for the next question? Assume call warrant A and call warrant B are over the same underlying. A fall in the underlying price will see what? All right, so here is the effective gearing. Call warrant A has an effective gearing of 6.8 times. Call warrant B has an effective gearing of 3.5 times. Okay, time's up. Call warrant A declining a larger percentage than call warrant B. Okay, the answer is A. So which we have 178 of you who got it correct. So the #1 spot is overtaken by Madeline Tan, followed by Tan Kim Hong and Gan Ko Count. Okay. Are you ready for the next question? Structured warrant with high liquidity allow investors to enter and exit their positions quickly. Liquidity is based on the volumes provided on the bid and offer price or the warrants traded volume. Okay. All right, the answer is A, the volumes provided on the bid and offer price. Okay, so we have 286 of you who got it correct. So let's see the leadership board. Okay, Madeline Tan still is in the leadership board, followed by Gan Ko Kao and Tan Kim Hong. Awesome. Okay, are you guys ready for the next question? Which warrant tool on Macquarie's website allow investors to estimate the holding cost of a warrant? A, live metrics, B, warrant terms, C, warrant calculator, and D, technical events lookup. The answer is C, warrant calculator. There are 136 of you who got it correct. Okay, so let's see the leadership scoreboard. So still leading by Madeline Tan, Gan Ko Kong, and Tan Kim Hong. All right, so let's go to the next question. My trading system end goal should include, okay, A, trading goal, trading rules, and a weekly, monthly trading plan. B, backtesting everything. C, a system for FATA strategy. And D, all of the above. The answer is D, all of the above. So the leadership board still remain the same, 5%, no change. Okay, so we want to acknowledge Sean Chew is the highest climber, up 322 places. Are you guys ready for the next question? True or false question? The time horizon strategy is based on the time horizon of a trader. True or false? The answer is true. We have 246 of you who got it correct. Okay, the time horizon strategy is based on the time horizon of a trader. So let's refresh. Okay, now Letitia Yo is back to the number 2 spot, followed by Gan Ko Kang at the number 3, whereby the top leaders is still Madeline Tan. Okay, let's see the next question. The time horizon strategy is simplified into Gaya, Mutu, Keunggulan, or the Musty. This should be a pretty easy question if you have been paying attention. All right, the correct answer is Musty. Okay, of course, you need to remember what actually Musty stand for. So let's see the leadership board. Okay, Madeline is still number 1, followed by Gan Ko Kang and Tan Kim Hong, which is number 3. We have Letitia Yo draw of the top 2. So next question. True or false question? MES stands for metrics, effective gearing, and sensitivity. Is it true or is it false? The answer is true, which majority of you got it correct. More than 90% of you got it correct. So let's see the leadership board. Okay, we still have Madeline leading the race, followed by Gan Ko Kang and Tan Kim Hong. Okay, are you ready for the second last questions? TI stands for time to expiry and issuer. Is it true or is it false? The answer is true, which we have majority of you got it correct. So let's refresh the leadership board. Still same. Madeline, Gan Ko Kang, and Tan Kim Hong are the top 3 winners at the moment. So now we are coming to the last questions of this Kahoot. Are you ready? So this is the last questions. If you are not leading, this is a chance for you to turn around. Please do your best and give a fastest response. Okay. Now this is the last questions. Which key risk factors should I be extra aware of and manage? A, limited lifespan. B, leverage risk. 3, market risk. D, all of the above. The answer is D, all of the above. Okay, so let's see who are the winners. Okay, number 3rd place is Tan Kim Hong with 2,000 over points. Number second place, Gun Kokao, 2,000 over points. And the first place is Madeline Tan. Okay, so here are our top 3 winners, whereby we have runner-ups, which are Letitia Yo. So please, for the winners, I will need you to reach out to us in the chat group so that we know who you are. Okay. So for the winners, please leave a comment on our webinar chat group or in the YouTube. All right. Thank you everybody for your wonderful participation. So now we have come to the almost the end of this webinar, brought to you by Bursa Malaysia, and this is the first time that we launched this Kahoot quiz on a Bursa webinar platform. So it's the first time that we do it. If there's any way that we didn't do it correctly, please forgive us. And we noticed that there were some delay on YouTube. Of course, no, this is beyond our control. The YouTube streaming is a little bit beyond our control. So we will take this feedback as a constructive feedback, and then we will modify the quiz layout next time that we launch this quiz. Okay, apologies for the people who are streaming in from YouTube where there's some delay, for you to enable you to participate in the quiz smoothly. So anyway, this is the second last slide for our presentation today. So if you are very new to the market, or if you want to take your knowledge up one notch in the world of financial learning, please visit Bursa Academy, which is a newly academy set up by Bursa. There's a comprehensive one-stop e-learning platform that aims to provide investors with a continuous and holistic learning journey. It's very simplified, it is user-friendly, and it's accessible anywhere, anytime, at your own pace. You can use your mobile phone to access Bursa Academy. So in the Bursa Academy, there are videos, there are webinars, or there are learning materials for you to learn more about FATA, okay, fundamental analysis, technical analysis, or learn about their product knowledge, such as structured warrants, maybe real estate investment trust, exchange traded funds, or even Islamic product as well. Go to www.bursaacademy.bursamarketplace.com so that you'll be able to access the learnings at your fingertip. Okay, so you will also find some of our webinars hosted by our company there on Bursa Malaysia, and so you can learn at your own pace. It's very friendly, user-friendly, and Bursa invested a lot of money to build up this website, and please go there and make the full use of it. Okay, so all the experts' knowledge are there on Bursa Academy. So with that, I want to thank every one of you who participate in this webinar. For the winners, okay, help us reach out to us on the YouTube, or also reach out to us on the Zoom webinar platform. For those who did not win, don't be discouraged. Okay, there are just 500 of you who are online. We can only afford to give prizes to the top 3, but stay tuned for the next Bursa webinar. We'll be announcing to you more awesome contents, and also perhaps there will be more quizzes coming along next time with amazing prizes for you to win. All right, so thank you everybody for tuning in to learn about structured warrants. I believe now you have understood structured warrants better, understand how to look at the live matrix, understand what are the key considerations, key risks to consider before you invest and before you trade, and then what are the trading strategies that shared by Isabelle just now on how you can trade warrants using gearing, sensitivity, and others. All right, wish you thank you so much for tuning in on a Saturday morning, and wish you the pleasant rest of the day. Thank you so much to our both speakers for sharing their nugget of wisdom with us, and I'll see you all next time in our Bursa webinar. Bye bye.